about. And let me go to Radhika Rao on this. She's Senior Economist and Executive Director at DBS Bank. Radhika, very good morning to you, and thank you so much for speaking with us. A positive surprise for you as well?
Yeah, certainly. I mean, compared to where the consensus was, I think it is a good 1 percentage point higher. And when we look at the breakdown, obviously there is, I think, hits and misses, so to speak, but more hits than misses.
Okay, what for you were the biggest hits? Let's start with that point.
I think the biggest thing, and perhaps partly anticipated, was also that the service sector was going to do very well. I think thanks to the, what we call statistically deflators, which are basically price indices. You have nominal value and then you take the price indices or take the inflation part out of it, and you look at what is happening on the real growth front. And that I would think was one of the biggest surprises. I mean, surprises in the sense that it came out about 9% plus. And when you look at the breakdown, even the labor intensive sectors like trade, that did very well as well. So around 8%, 9% mark. And this is a heavy weight in overall growth. So that I think was good. The other one which was anticipated, also did very well, was government expenditure. We should remember that same time last year, expenditure really kicked off, was in a lull period because of elections. And this year we've really seen that benefit capital as well as revenue expenditure, which is showing up in various factors. It's showing up in investment. It's also showing up on the GVA front in public admin performance. And then farm output. Farm output did well. I think it did not as well as we had anticipated in terms of the growth rate, but it still did very well compared to the same time last year. Now, and the fourth and final point will be what you had just spoken about before we discussed this, was the consumption. I think consumption continues to maintain a decent beat. Of course, the overall picture, I don't think it's broad-based, but nonetheless, I think that added to headline growth as well.
Radhika, hi, morning. Alex here. I'm just wondering what this does to the full year picture. Early days, of course, in the financial year, and so many uncertainties, the tariff impact, how long that holds, if the GDP reform is passed through, what the implications of that are. I know that the CEA has said largely expecting it within the range that was originally planned. Are you looking at an upside potential?
Hi, Alex. Certainly, I think there is. We have kind of a picture of what's going to happen to the first half of fiscal year. We've got the April-June numbers, which was at about 7.8%. I think the second quarter of the fiscal year is also going to look quite strong. We should remember that there was a gap down in the deflators, the same inflation readings in this period, which means another 7% plus growth number is still quite possible. And you had seen a bit of front loading of exports also go into this quarter. So these things are going to keep the headline up. That means in the first half of the fiscal year, we're going to see growth in the 7% plus range. So to fulfill a 6% handle growth level, you need growth to actually slow down quite significantly in the second half. I think that's where a bulk of, you're going to see a two-way forces there, because you're going to see part of the benefit from GST changes, for example. It would be evident in this quarter. I think it'll be evident much more in the October to December quarter. And then, of course, you've got the tariff impact also playing up around the same time. So that those two-way forces, I think, will take growth down in the second half of the year. But certainly, I would say, we have upgraded our forecast, compared to where we were earlier. We were a bit below consensus, but we have, taken that higher. Depending on how the second quarter growth, I would say the full year forecast for the street is likely to go up as the year rolls by.
Radhika, just wondering, what is the policy action gonna likely look like? Because the first two quarters are good, and there are talks of whether there is a pause, or whether the Reserve Bank of India thinks that we know that the second half of the financial year will, as you also said, have issues, and therefore the policy should try and look at what can happen to the going ahead print, because even the deflator will not be into effect in the second half, right? So does the Reserve Bank of India, to your mind, still go ahead and have a looser fiscal policy, or do they tighten up because of the print?
So I think the picture really quite changed heading into this GDP number. I think ahead of that, you see when the RBI met last, they had the 25% tariff announcement already undertaken, but that unspecified, the second rate was not out as then. So if you can see in the minutes, they do flag the risks that tariff are important to watch, especially the members. So fast forward, before the GDP meeting, GDP release, it did look like, they would see scope for downward revision of their growth forecast, and that, tariffs will become quite a big headwind, even though there are GST changes. But I think post the GDP number, so for our own forecast, we had expected the rate cuts to end at 5.5. So in our baseline, we don't have any more cuts penciled in. I would think after the GDP number, I think the probability of rate cut has certainly gone down, especially in the October meeting. But all really depends on the guidance. If they do think that economy still, to my mind, in August, at the policy meeting, the governor sounded quite balanced. I mean, he saw downside risk, but not that big. Minutes seem to suggest a bigger worry on growth. But, come October, do they really feel that growth is still at risk? All the full year growth can still be well above 6.5%, in which case they don't really need to do much. Just a final point here, I would say monetary policy can do only so much. I would think the current nature of tariff-related impact, that requires more fiscal support. And I think that has to be very directed as well, because it's very asymmetrical on sectors. So much more to the businesses, much more to the sectors that are in need. I think that would be very, very important. So that's where fiscal policy, I think, will play a bigger part. And there is headroom to, in fact, go ahead and provide a lot more support. So I think that is the package that we would be watching for quite closely, rather than, what one or two more cuts can do, especially to the growth picture.
Radhika, quick follow-up on implications of the CRR cut that comes through in September, and the liquidity, of course, has not been a problem for a while, but could you spell out what you think the government can do at this stage? Because the GST, I think a lot of people are waiting to see what actually will come about, because the states seem to be a little bit cagey about letting any revenue go. So do you have any expectations on that front as well?
Yes, you did bring about an important point, which is, what the states are going to do. See, at this point, I think states have phase two developments that they have to contend with. One is, of course, the GST change. I think the council meets soon this month. How much of leeway are the states able to provide will be important, because if the revenue while GST goes down, then the attention goes back to their own tax revenues or their own revenue collections, which haven't been very strong. That's one. And the other one is, of course, tariff-related impact. Center plays a part, but the states have to also play a bigger part, because, truth be told, the businesses that they're dealing with, the grassroots level issues are going to be theirs to solve. So which means, again, expenditure will have to go from their pockets as well. So these are two things that they will have to contend with as we approach the GST Council meeting and thereafter. So I would say, going back to your previous question on what needs to be done, I would say sector-specific things like, interest equalization levy, or if there's any in subvention schemes that can be provided, any credit guarantee scheme, again, could be provided to the businesses. Apart from, so these would be short-term focused, getting them to go over this period. And the second one would be, of course, on a structural point of view, look for markets that are beyond the US. Look at Europe, look at Latin.
On that point, Radhika, and these visuals are coming in live from the SCO summit right now, even as we're speaking, and very interesting pictures of a huddle, really, with Prime Minister Modi actually holding forth there in those pictures, speaking with Xi Jinping and Vladimir Putin. There is a bilateral with Mr. Putin at 9:45 a.m. India time. There is going to be an address by Prime Minister Modi in some time. And just this troika of the RIC in BRICS together in this meet right now in the backdrop of tariffs. Do you think that there is an economic case for a buffer there to the onslaught of tariffs that we are now facing at 50% from America?
Certainly, India is looking at markets beyond the US. I think, again, with the US, there is still room for negotiations, but certainly the other countries have come together to look for alternate markets. And like you rightly point out, the RIC out of the BRIC has been meeting and speaking. I think for India, they will look at more bilateral linkages. With the relationship with Russia is different from relationship with China, for instance. With Russia, India runs a deficit. So because we tend to buy more of energy and fertilizers, so I think India will look at what are the other markets that India can sell to. So including in Russia could be things like pharma, could be things like pharmaceutical machinery, and so on. So try and balance that trade. So it provides one more window for Indian exporters. With China, I think the trade relationship was a bit frosty in the past 4-5 years, but looking at a more strategic relationship, being able technologies transfer, more FDI, and all of that would be something that India would be interested in. But it's quite interesting to see that these countries have met at Shanghai at this point, and I think there would be more coming out of it, certainly by way of investment as well as trade announcements.
Radhika, always a pleasure speaking with you. Thanks so much for taking the time.